Canberra for Cam's Mortgage Minute on Tuesday, January the 8th. Hey, well, I've been absent. Haven't done a lot of mortgage minutes lately. Still recovering over this nasty cold virus, whatever you want to call it. My gosh, it takes forever to get over this thing. Anyways, today I thought I would talk to you about tax evasion and basically tax evasion rental income. It seems to be certainly going to be more of a prevalent issue in this coming year. What I'm finding is that with the recent B20 rule changes and the rules surrounding declaration of rental income, it's coming more into play. I'll give you an example. One of our bigger credit unions that we deal with constantly, and they're all over the map, is they recently came out with a policy that if you are not declaring rental income on a property that you do not reside in other words, the property is purely a rental property and you're not declaring any of the rental income from it, they won't use a dime of it. In the past, we could have used economic rent letters. We could have done it different ways. We could have shown bank deposits, whatever. Now their policy is straight, clear cut. It's like, no, we won't use a dime of it because it's deemed to be tax evasion, and that's what you're doing. I mean, quite frankly, it is. If you're not declaring rental income, you know what? You are doing tax evasion because you're not showing it anywhere. And that's certainly in the past was looked upon with disdain, but now it's definitely going to come into play where lenders are not even going to use that income. And from my understanding and from what I've heard behind the grapevine is that some of these lenders are now mandated to report this to CRA and people like such. So what was really brought this on was OSFI, like I told you, the Office of the Superintendent of Financial Institutions. When they started mandating a lot of these changes in the background, they ran across these files quite often and said, hey, you know what, we got a problem here. So with anti-money laundering and everything else, this is deemed to be that. It's deemed to be tax evasion, money laundering, whatever. It's all lumped into this one giant category. So what does this mean to you? It means that if you're a landlord, you own property other than your principal residence and you have rental income from it, you better seriously consider declaring that income, not only from the fact that it's illegal not to do so, but more importantly as well that if you want a mortgage in the future, there's going to be virtually no lenders that are going to consider that rental income as an option. And typically the only lenders that more than likely may still consider that as rental income will probably be lenders that are going to be charging much higher rates, more in the B category, so you won't get prime rates. And you know what, quite frankly, there's no reason why you shouldn't be paying taxes on it. Bottom line is when we do tax evasion, when we do things such as this and not paying our taxes, basically what you're doing is you're cheating the other taxpayers out there. It's not government, this giant, unknown entity. It's your fellow taxpayers that wind up paying for it along the way. And quite frankly, in the chair I sit in, I see a lot of applications and a lot of times where rental income just simply isn't declared at all. I ran into a recent situation, it was pretty extreme, where I had clients almost in the tune of almost $80,000 a year of rental income, which was not being reported anywhere. And you know what, when you think about the tax implications of that, and it's massive, that's a whole bunch of taxes that nobody's getting paid on. And really the only person being cheated is the fellow taxpayer who now has to foot the bill for these folks just like everyone else. So, bottom line, if you want a mortgage in the future, you've got rental income, you better seriously look at declaring that income. And now with the tax year just having ended and filings due, what better time to be definitely looking at that and going forward. And really a lot of people have a misnomer about it. I mean, bottom line is there's a lot of expenses you can deduct through if you have rental property. So it's not like just because you're grossing, let's say, $30,000 a year of rental income means that you're going to get taxed on all of it. The interest rate is tax deductible. There's a whole bunch of management expenses, other expenses. If you've got a good accountant, once you look at all your options, you're really not paying much tax at the end of the day, and above all else are above board and staying honest and not violating the law or practicing tax evasion or being classified into money laundering or some other silly thing. Anyway, it's been Cam for Cam's Mortgage Minute. I will see you tomorrow. And again, if you need anything mortgage-wise, don't hesitate. Give us a call. It's Cam at Auxilium. The Auxilium team, we're more than here and happy to help out. And I will see you tomorrow. And hey, I made it through without coughing through this whole session. Fabulous. See you tomorrow.